Alright everybody, welcome back to the Hit the Bid program where we play all the songs from the 80s, 90s, and today's hits to get you through your trading environment. That's right, this one's Milli Vanilli, Blame It on the Rain. Alright, throwing it back to the 90s where we didn't care if the artists were real or not. Fantastic. No, actually the reason I'm playing this song is that, what do we got today? We got some jobless numbers coming out. We're going to say the market's going to do whatever it does today because of those numbers. We're saying that yesterday was the market went down because the retail sales were weaker than expected. Come on. I hate the news. I hate financial media at this point, even though I'm sort of part of it. Stop giving it a name. Blame it on the rain. Blame it on anything you want. The market was overbought. We were time for a sell-off. Just give it a name. Say what it is. Say what it is. Report what the market is actually doing. Talk about something important. Talk about how the market's been running for 9 straight weeks for the first time in the history of the world. Talk about stocks that are up 400, 500, 600% that should pull back. And I'm talking about the HIG. Okay? Now, you got to understand, when I talk about Dow 12,000, NASDAQ 2,500 in 3 weeks, that's coming out of the resentment for me selling. Is resentment the word? The disappointment in myself for not milking some of these stocks that I bought at those lows for a little bit longer. And the HIG is one example of a stock that just moves so much percentage-wise for a $10 stock that I always underestimate what this thing's gonna do. But one thing I didn't do was underestimate the idea of me selling the hell out of a stock that I had bought at $5 that was sitting there at $16. Granted, of course, I missed 2 more points on the upside on Friday, and I'm pretty pissed off that I was shorting it on that Friday about a week ago. A week ago, I was shorting that stock at the close, but of course, I'm not going to hold any financials over the weekend short, because who knows? Yeah, the stock was $3, but this thing could go to $40. Woohoo! Gap it up on some awesome bad news. Now, another reason I've been doing well is because I've embraced the horror that you go and buy stocks that don't make sense. Just ignore the television, ignore what's going on around you, and just do what the stock market is telling you to do. Isolate yourself. I stopped watching CNBC. I don't even listen to the radio. I sit there, I watch my stocks, I know what they're going to do. I try to make my little bit each day. And since I've been trying to make a little bit each day and following my sports gambling theory, I've been making a little bit each day, which is a lot better than losing money. So, not making your 5, 10 grand days. I'm not ever going to have those days again, considering the way I trade. But if I can make my 300, 400, 500, 1,000, 1,200, or maybe 2 grand a day, that's fine, as long as I don't have any of those large losing days. I'll take it. Now with the HIG, I was telling people to short that HIG. I was telling people about straddles. Now a straddle is a position where you're buying a call and a put. Now you're thinking, why the hell would I do that? I'm not making any money if the stock doesn't, have some crazy move. But in this market, generally we have an up day followed by a down day, or we have 5 up days and then we have 3 or 4 down days. So if you're long a call and long a put, and you can take some profit on the call side, and then you've still got those puts that you thought were going to be expiring worthless, next thing you know, they're back in play. That's why I was telling you got to get into some 17.5 puts on the HIG. The stock was just $11. It was just 3 in March. Where was it going to go? But where was it going to go? Exactly, we don't know. That's why I suggested get yourself some $21 calls. I'm sorry, $19 calls were trading at 75 cents, I believe, and the 17.5 puts were trading at $1.25. So I was telling you to lay out $2. Okay, so the first inclination was, in this situation, we could have traded out of the position. What I mean was, when that stock market gapped down on Monday and HIG was going back under 17, at that moment, I had decided that the stock was done. We were going back to at least 14, maybe even 12.5 by expiration. So what was I thinking about doing? I was thinking about just selling out of those calls, but they were pretty much worthless in the blink of an eye. Got out of the call side, held on to the put side, and then you made all that money back anyway. The HIG. It's a stock you gotta be trading. thing is a mover, a shaker, and it'll kick the fucking shit out of you if you're not careful. So anyway, the market actually has gone down for a couple of days in a row here. You're wondering where Joey Dip Hard is? How you doing? Where you going? Do I buy stocks now? Are we gonna dip harder? What are we gonna do? Tell me, what's gonna happen? I don't care. I'm not a bull, I'm not a bear anymore. I know nothing. I know nothing except I watch for trend reversals. Now take a look at the stocks that I've been trading. US Steel, X. Joy Global, J-O-Y-G. HIG, MET. Look at some of the Baidus, the FSLRs. Once they topped out, all you had to do was, okay, these stocks are probably going to go back to that last spot of the breakout. Now, Joy Global is not going to reverse and go right back down to 14 bucks. It's going to go back to the levels where it came from, which were resistance on the way up, now becomes support on the way down. So the stock went back to about 27.5, exactly where I thought it was going to go. But, again, as smart as I am and how capable I am sometimes at making money in the stock market, I cannot sell out of a long and immediately go short. I'm not that good. Considering the fact that most stocks go up after I sell out of them, there's no way in hell I'm going to be doing that. Except I took a little short on that HIG because that's how confident I was. But that was a buck and a half after the fact that it went down. But it did have some follow-through, and all we need as traders is follow-through. And the market, my God, is following through. You can go long, and we have a decent move up. You can go short, and finally, we've been having some decent moves on the downside. And everybody's waiting for this move, right? So give it a name, call it what you want, make up something. Let's call it Gamera or Godzilla. Every time the market goes down, we'll call it the Godzilla sell-off. Or we'll call it the Frank Sinatra sell-off, downtown. I used to put down, every time the market was going down, I would be blasting any song with the word down in it. Because I like down days. Down days are fun. Shorting seems to work out quicker, the pain is less, stock breaks down, boom, it's shit in the bed, you're having a great old time, and you take your money and it's over with. Plus, on the way down, what it's doing is giving you a buying opportunity for the next 3 or 4 day rally whenever that does come. But now we're in that part of limbo where you got to decide whether or not is this going to be just a dip or is this the beginning of a really bad sell-off that I don't want to be involved in. You know what? You make that decision. I got to tell you one thing. I have no idea. There's so many reasons to be not even living in this country anymore. We're printing money. Inflation's going to be coming around the corner. Eventually, money's not going to be worth anything. And I'm telling you, I still got my swords ready because there's going to be some more destruction out there sooner or later. I'm repeating songs now. You can't blame the youth. Blame somebody. So anyway, the SRS. I bought a little bit more of the SRS just based on the fact that I don't think it could go to zero that quickly. And of course, it's not about real estate. It's not about REITs. It's about sentiment. Get into the stock. Oh, market tweak, buy SRS. That's what it is. I don't know what it is, but you know what? The stock's up 5 points. Tell me, did whatever inside there get 5 points worse? I don't care. I don't care. The stock's up 5 points. Explain it to me some other time. I'm going to take my 5 points now. Thanks. But you also got to understand, when I make these videos and I'm just out there frantic, pissed off about the market going one direction after I got out, you can't take anything that I say in these videos too serious, okay? And also, but I tell you about the CYOU. I told you after those earnings came out, the CYOU would be dead. Dead. Because now they know about the stock. When the IPO first came out, it was all fun and games. Nobody knew what was going on. It could go to 100. Who knows? Keep buying it, right? Now the numbers are out. Stock's dead. Forget about that stock now. Goodbye. But what was I going to say? When I make these predictions on the direction of the market or where we're headed, the most important thing is being in this chat room that I have. And when I go live, you come to the live chat room. Because right now, and if you've been in the live chat room, we've had between 10 and 20, maybe 30 people in the live chat room. I have not given one bad recommendation, idea, entry point live. So there's no hiding it. I told you guys to get in. Look at me. I'm getting out. I release my finger from the button, and the magic happens. Mikey Sunglasses, that HIG was for you. I told you it hit 18. He's like, give me something now, give me something now. I'm like, hig to 18. Boom. Boom.